Welcome back to the Sovereign Ratio. Today we're going to do a total crypto market update, and I'm going to provide some information from what I'm seeing on the charts and what my plan is for the next 30 days or so before the halving with that information. But first, I have a very important announcement to make.
Council has discussed crypto regulations and legislations at length, and we have come to the conclusion that instead of regulating, we are going to ape a fat bag each into laptop and pump it to over $1.3 trillion market cap. Let's fucking go, crackheads.
Ape a fat bag straight into laptop. Let's fucking go, crackheads. Music to my ears. If you're new here, please hit the subscribe button, the like button, and leave me a comment below. It's pretty obvious at this point that my idea of the golden rejection failed this cycle. While it played out very well in other cycles, with Bitcoin looking to reject between 48 and 50,000 like it normally would have, that didn't play out. And in the last video that I made, I talked about pi cycles, and we'll do a quick review of pi cycles momentarily, but just at a broad view, you can see very clearly that Bitcoin in relatively quick fashion shot up to make a new all-time high at 69,200 or so, and then in the last day has actually gone up to surpass that, coming in at 70,000 and about $50, which is incredible performance pre-halving for this asset. So what we're looking at on this chart, it's a weekly chart. I've gone ahead and added the pi cycle high and low indicator to it, and I've also ran a Fibonacci retracement from this low to what is presumed currently to be the high here. We don't really know, but I'm just assuming that it is, and kind of ran a Fibonacci sequence and then drawn boxes at various levels on the Fibonacci to kind of get an idea of where a potential retracement could come. Now, I know I've been calling for a retracement for probably 2 months now or more, and it didn't happen yet as far as a healthy 30% or higher correction. Now, what I'm going to present today is a lot of confluence and different things that I'm seeing that maybe should just be something you think about for where Bitcoin's going to go going forward. So a quick recap of my last video, I talked about the pi cycle indicator, specifically this Bitcoin high long moving average. You can see that just in the last week, Bitcoin has actually come up and wicked above this pi cycle long MA, which is actually a 350-day simple moving average that's built into the pi cycle indicator if you add it to your chart. And I spoke in my previous video that perhaps this was something to take interest in simply because I noticed a correlation that I had not noticed previously. And I'm going to show you what that is if I go back to previous cycles. Now here, what I've been calling for again is the 61865 golden retracement, which has happened in every previous cycle. The one thing that I failed to notice in that analysis was that the pi cycle indicator, the long moving average, was also an area of interest where Bitcoin rejected off of each and every time here in 2019. And then if I go back here, it did the exact same thing in 2016. So without knowing about the pi cycle indicator and that confluence, everybody, including me, thought, hey, maybe it's the golden rejection. It's just the 618 rejection. Well, in this case, because the pi cycle indicator and the golden rejection have lined up in every previous cycle, it got me thinking, maybe we've been rejecting off the pi cycle 350-day simple moving average every single time instead of the golden extension. It's pretty obvious if you watch my previous videos that we blew right past the golden extension, but that long simple moving average is currently sitting at $68,614.20. Not only do we have Bitcoin hitting a giant even number, $70,000, and also approaching its pi cycle 350-day long moving average at the exact same time that we have that, we also have a lot of different things. One of those is Ethereum is hitting its 786 extension. Like we've talked about Bitcoin rejecting off its golden extension, there's a possibility that Ethereum could reject off of its 786 extension. And interestingly enough, the pi cycle indicator for Ethereum, the long moving average, is sitting right there in the same area. And currently, Ethereum is rejecting off of both that long moving average and the 786 extension. Yet another piece of confluence for potential correction from this level is simply the USDT dominance chart. If you look at the support line, this support line goes all the way back to June 2019. This is a very long-term support line on the weekly chart, and we're at it right now. USDT dominance is sitting right around 4%, and I've drawn this box from the top of this support line all the way down here to 3.76%, which is the bottom of this candle wick right here that we had in March of 2022. So this box right here is my area of interest for a big bounce. Now, I don't think that USDT dominance is going to bounce and completely ruin the cycle. I don't know what it's going to do, but my analysis of the situation is that we have some points here at 5.6% and also at 6.5% that have been supported and resistance levels in the past. And I'm not putting it out of the realm of possibility for USDT dominance to make a quick move back up to test one of these support lines before ultimately either coming back here or then coming back here and breaking down for the bull run to start. If I go to the daily chart on the USDT dominance, you can see that right here on March 5th, we tested that level where I drew the box. And then just yesterday, which was just a few minutes ago because this is the close of the previous day, we actually tested that box again and bounced up. It's going to be interesting to see what happens here with USDT dominance on a 4-year long trend line. That's not something to take lightly, right? If we're looking at a 15-minute time frame and we see a trend line, that's not nearly as significant as something on a weekly chart that's 4 years in the making. Now, something I want to talk about is this left translated cycle that a lot of people are talking about. A lot of people are saying that the cycle is broken because of the intensity behind this ETF approval and the incredible movement in Bitcoin subsequent to that. Now, what I want to say is that the 4-year cycle cannot be broken. The 4-year cycle is the 4-year cycle. It's programmed into Bitcoin. So effectively breaking the 4-year cycle is not something that's possible. Now, price action within that 4-year cycle could definitely be different. And a lot of people are saying that something like this could possibly happen. I've drawn 2 boxes here to separate 2024 and 2025 into October, where the anticipated end of the bull market would be, at least in my opinion, based off of previous data. A lot of people are saying that the Bitcoin price could easily come up here to something like 200,000. I didn't draw my box big enough, but you'll get the point. Bitcoin could easily rocket up to 200,000 or so in 2024 and then have a magnificent blow off top, and then ultimately see the drop down in 2025 and have a sideways market until the next halving or whatever the case may be. Now, for me, I actually don't think that is what's going to happen. Now, I don't know that. This is just my opinion. I just think we're in an environment where intensity is rapidly increasing. We're seeing bank failures more and more often. Eventually, banks are going to be phased out just because of the nature of the US dollar and the way that it's being handled, the amount of debt in the system. Eventually, banks aren't going to exist. I believe that wholeheartedly. And there's no better place to have assets than in the crypto space. Now, I know that seems far-fetched. A lot of people think that's crazy, but really, if you do a deep dive into the economy of both the United States and the world, things are not good. There's a lot of things brewing right now that could cause a complete financial meltdown, and people, I think, are oblivious to the fact that that's a possibility. So for me, I would rather have my assets mostly in something that's going to counteract any of that happening, which would be cryptocurrency. Now, as far as the left translated cycle is concerned, again, I don't think that this is going to happen simply because I just think that there's more intensity behind it. Crypto is becoming more mainstream. It's now a political tool. It's being talked about in presidential campaigns. It's being massively adopted by boomers through an ETF. It's just becoming that mainstream asset that believers have always thought that it would become. I simply think that this is just going to be a more intense cycle. I think we're going to see a huge run up in Bitcoin, probably to the area of $220,000. That's my target based off of some fib extensions that I've done in comparison to previous cycles. Again, I know it's not a great idea to compare to previous cycles, but for me, what I'm looking at is about $150,000 Bitcoin, 365 days or 1 year after the halving. And then by the end of the final run up, I'm looking at a $220,000 Bitcoin. In addition to that, I'm thinking that this is going to be one of the best, if not the best altcoin runs that we've ever had. And I'm seeing a lot of strength throughout the entire market, to the point where, again, we haven't even had a 30% correction. I hope we get one. And I will say, like I've said in previous videos, I have some dry powder left. And I'm ready to deploy that dry powder. So I've gone ahead and put limit orders on everything that I want in case there is a pullback from this confluence of indicators and things that I'm seeing right now while Bitcoin goes to the 70K mark. Now, before I get too excited about pullbacks, however, it's also worth noting that this chart that I've talked about many times on this channel, total 3 minus USDT divided by Bitcoin, My target for that has been the 0.3 to 0.25 area for the best time to buy altcoins prior to the halving. Well, with as close to the halving as we are, this chart has not gone down anywhere close to that level. It's actually sitting at 0.45 right now with a major bottoming wick on the last 2 weekly candles, which tells me there's a potential that we're going to have a big altcoin run right now before the halving. So that's kind of the decision that I need to make right now for the next 30 days is, am I going to look for a pullback and set buy limit orders at specific Fibonacci levels like the 382 or the 0.5 or the 618 on these altcoins? Or is it less risky for me to just finish my dry powder right now and buy? Because this chart is looking quite bullish, to be honest. I don't really know. It could take one turn in Bitcoin to make this chart look bearish again. But if Bitcoin just kind of grinds and consolidates around that $70,000 level, it's really feasible that the altcoin charts could take off. Now, the interesting thing is, if I switch to ETH BTC looks like it wants to break out of this trend line that it's been in since September of 2022, but it's kind of playing a game of cat and mouse, right? Like it popped above here in January, popped back down in February, popped back up at late February, pop back down, and now it looks like it's trying to go up again. You can see this is basically an indecision candle at this point. You've got a wick on the top, a wick on the bottom, and I don't really know what's going to happen here. This chart is historically a great indicator for the altcoin market. If ETH BTC is performing very well, generally altcoins will perform very well right after that, because generally the flow of capital in this market is Bitcoin, move up, flow into ETH, move up, flow into large cap altcoins. Large cap altcoins go up, float into mid, then float into small, then float into micro, and then the cycle starts over with all of those profits flowing back into Bitcoin, and it goes like that over and over again. Now, because I'm not seeing a decision on ETH as far as its ETH BTC value, I'm very much in indecision myself. But again, looking at this chart right here, this altcoin against Bitcoin chart, it looks bullish. I don't know. I think it's worth it to wait till the end of the week and specifically see what happens on the Bitcoin chart to see if both Bitcoin and Ethereum reject from that pi cycle high indicator that is currently sitting at 68,600 on Bitcoin, and on Ethereum it's currently sitting at 4,053. I just think there's a lot of confluence here between the USDT dominance, the Bitcoin at the pi cycle, the ETH at the pi cycle, both of them at big even numbers, big landmark even numbers. ETH hitting a 786 extension, Bitcoin hitting its all-time high. You know, all of this confluence of things. Oversold RSIs like in the 90s. The Crypto Fear and Greed Index is currently sitting at 85, which is very high. The open interest in the market is sitting around $18 billion, which is the highest it's been since the second peak of the last bull market. There's just all this confluence of information saying pullback, 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 pullback. Now, I'm not saying that sentiment can't override that, because the ETF bullishness and sentiment certainly could probably override that. But from a technical standpoint, it's pullback, pullback, pullback. Every one of these things says pullback. So if it goes beyond this point, it continues to go up, man, I don't know what to say, because in every previous bull market, we'll switch back to the Bitcoin chart here. In every previous bull market, when Bitcoin actually breaks that pi cycle high moving average, that's when the exponential age starts. Here in 2020, when that happened, now of course you missed out on a lot of gains before that, but when that breaks and holds, it's a rocket ship. And then same back here, whenever that breaks and holds, which happened in July of 2017, it was an absolute rocket ship. I mean, look at this gain. It went from 2,500 Bitcoin to 19,800 Bitcoin, you know, by the end of the cycle. So the breaking of that long moving average is no joke. So that's why at the end of this week, I really want to see if Bitcoin has closed a weekly candle above that 350-day simple. Same with Ethereum. I want to see if USDT dominance is breaking below that support line. The end of this week is a very, very big week, especially knowing that the halving is coming up in right around 30 days. This is a very important time to develop a plan. And if you have dry powder left, make sure you know what to do with that dry powder. On a final note, I want to say that there are some altcoins that are just performing at an insane rate right now. One of them is Arweave. which recently had some big announcements regarding its technology, you can see that just in the last few weeks, Arweave has done a 300% gain, which is absolutely insane, right? Like from the break of this weekly trend line, it actually went up to $46 from a previous valuation of like $8 in the course of 3 weeks. If that doesn't scream bull market, I don't know what does. If Coinbase shutting down twice in the same week doesn't scream bull market, I don't know what does. But that being said, as bullish as I am for the next year, year and a half in crypto, this market needs a pullback. If it doesn't happen, I'm actually quite scared that there's going to be an early blow off top that goes down very far and wrecks a lot of people because the newbies don't really know what to do in their first cycle. But what would be really healthy right now would be a simple correction. If you're looking at altcoins, we'll use this one as an example. It's very simple. When things are this bullish, there's really only one kind of analysis to do, in my opinion. Maybe two if you consider the volume profile. We're not going to talk about volume profile right now, but if you grab a Fibonacci tool and take it from the bottom of this movement to where it is now, here's some interest points for me. If there's a correction, you've got the 236 at 37.50, the 382 at 31.67, the 0.5 at 27. You know, for me, I would be just drawing some boxes here like, hey, this is probably my first buy point here at 31.67. And then I could just hit Control C to copy that, hit paste, and then, hey, there's another interest for me here at the 0.5 area. Now, because of the bullishness in the market, I don't think that we're going to see like golden pocket retracements. Could we? Sure, because Bitcoin's extremely overextended, and if it had a big correction, that's totally within the realm of possibility. But if we do a measured move down to the 382, that's 32% on Arweave. The 0.5 is 41% on Arweave, and the golden pocket is 50% on Arweave. Now, in previous cycles, again, we've seen things of a 50 to 70% correction on altcoins pre-halving, but this cycle has not played out like previous ones, at least from the data that I've been studying and analyzing. I don't know what's going to happen, but this is really the way to analyze altcoins at this point. Like, if you think there's going to be a pullback, this is the kind of thing to do to try to find Fibonacci retracements to figure out where it could possibly go. And you have to set a limit order. You're not going to be able to be awake 24 hours a day and market buy into these levels if there's a drop. You've got to have a pre-existing order sitting there. So right now, 30 days from the halving, I would highly recommend that you start setting limit orders on every altcoin that you want. And I just did this 2 days ago, just in case it happens. If you're new here, please hit the subscribe button, the like button, leave me a comment below. Let me know some altcoins in the comments below that you'd like to see me analyze. Let me know what your favorite altcoins are. Let me know what you think of this confluence of indicators that I've talked about today. Surely it screams pullback to you, but if not, let me know what your thoughts are. We'll see you in the next video, and safe trading.